Okay guys, so today we're going to go over what's called an ABCD long or an ABCD pattern. The main purpose of this pattern is to safely enter a long position on either an intraday trade or just a swing trade, or you can even use it for overall investing in long-term positions. Now, what I always do to start off is I look at something that on a daily chart. I want to see where some major levels are, where some resistances might be, where some supports might be. I think those are all big levels. And that's what we're going to determine our entries and exits are on. So, for an ABCD long. Now, when people are trying to find a long trade, every single person is trying to capture a move. They're looking at all this momentum. They're getting, FOMO. They're like, shoot, I'm gonna miss this long trade. So they end up buying in. And now, a lot of times, people are buying near the top or when there's only a little bit left on a move, and then that move fails, and then they get caught trying to hold it, thinking it's going to go up higher, and then they end up turning that possible green trade into a red trade. So what I personally do, and what a lot of other guys do, they let that breakout run. They wait for the stock to do what's called a retracement, where it'll have a breakout, it'll retrace down to a previous level where it broke out from, find support, and then start trending back up. And you can see this on a daily chart, an hourly chart, a 5-minute chart, even a 1-minute chart. A 1-minute chart has a lot of data, so it's a little bit harder for some people to try to understand and read. So I always tell people, start with daily, start with 1 hour, and start with a 5-minute chart. That way it's less for you to comprehend at first, so it's a bit easier. I personally use a 5-minute chart a lot to trade with. I use one for some entries here and there, but the 5-minute chart is where I get a lot of my thesis from, along with a 1 hour 20-day chart. So, like I was saying, you're seeing these moves, you're like, oh my gosh, it's gone from $9 to $20. Really, you're buying a movement that there's no support. It's just trending up and up and up and up. There's no retracement. So the reality is you'd be chasing at that point. That's not trading. You're just gambling, hoping it goes up higher. That's not safe. While yes, you can make money doing that, majority of stocks fail. So you don't want to get caught on that stock that has a little bit of pump and just fails. And then you're caught with a bag. You're caught holding that loser. So you don't want to get in the habit of just buying and praying like a lot of guys do right now, unfortunately, because the stock market it's pumped up like crazy right now. So a lot of guys are building bad habits of buying and holding, hoping it goes up. You don't want to do that. You want to let that move happen, wait till it retraces, wait till it finds some support, some higher lows, which it did. Let's see, this is 111. Let's do this. Let me use a 4-hour chart for this. Make it a little easier to see. Okay, so this here is going to be 111, 121. As you can see, these are those runs. Comes down, kind of bases. What you're seeing is, you're seeing that move up, profits being taken. At this point, you see these bars down here? These are volume bars. Volume is dying off, but the stock is not dropping. That's a very big indicator, very big, that it's going to start to continue the trend again soon. So that's one thing I always personally look at. I always look for volume, and I look for where it might find support. Now, this may be a little tricky for some people to see, but This blue line here, that's a 50 EMA on a 1 hour time frame. It fails it, yet you see a big amount of buying pressure here. This long wick means something dropped hard and it got bought back up. So people are still seeing this as a possible long trade. So it got bought back up. So now your job is to kind of look and see and wait. Is it going to reclaim that 50 EMA? Is it going to find support? And now look, the next day, it creates a higher low. This is the higher low from here. You're like, okay, that caught my radar. And look what happens. It then basically finds the 50 EMA here, shoots through it, comes down, tests this previous day open price, which is this blue bar. This is the open price for that day. And then it starts to trend up. Now that is a trend reversal. So you want to long it on that day. And now if you longed it on that day, say you got in here, you longed it, even if you sold at the end of the day, that's 20% you made. Even if you sold at the tops, that's 15%. That's a 15% trade. That's $2.80 a share. But say you sold the next day, maybe 40%, maybe 30%. That's a huge number right there. And that's what you do. You buy here, you sell here. That's the goal. Buy low, sell high. Buy support, sell resistance, which could be here, could be here. If you do hold some, I always try to lock in partials wherever there's a resistance level. Like I would have sold half probably right here at 2086. And then just let it go with you. One thing you can do, if you do decide to go with a swing trade, you could use this 10 EMA as a guide for your swing, which I'll get into that later on down the road. But that's what an ABCD pattern is. Let the move happen. Don't chase. Let it come back. Find support. You buy in. You sell on the push. And it happens again. It pushes. And this is where we also took another position as well. It pushed up, came down, tested previous levels, found support on this previous level, found support on the 200 EMA on the 1 hour time frame, literally perfectly, came up, and we took a long on it. And we've been in that long this whole time. Came up, tested that previous resistance, where again, you can sell. You can sell halfway, you could sell at that top, you could sell half your position, comes back down, gives another long entry, because here's another support. And then goes back up, test that level again. This is now a major resistance level, we know that. Comes down, sets in higher lows. Again, finding support, pops back up. And it broke this major level here at 35 that we see. 35 was a big resistance level. And now we're still in this trade. We took this as a swing trade. We've done some day trades with CCIV, but mostly it's been a swing trade. Because look how easy this chart is to read on a larger time frame. You can trust this on a larger time frame. Some guys will call this a cup and handle. There's the cup, there's the handle. I just call it an ABCD long pattern. That's all I do. There's no specific name to it, but that's how you trade it. Some guys like to wait for the breakout, but me, I get in on that dip. Because think about it. If you're buying down here and you're selling at that resistance, even if you sell half, you're making 30%. You sell the resistance, you're making 60% on a trade. If you wait for that breakout and you buy the breakout, which I don't like to do, you're up 12%. You would have maybe top 20%. So you let a move happen, buy the support when it creates and finds a support, and ride the move up. Sell half or all or hold, depending on how the way the stock looks, at the previous resistance, because this is that resistance level now. Comes down, up, down, up. That's 80% of how I trade right there. Waiting for those moves, waiting for those dips to buy in and sell at the pops. Sell the pop. Sell the pop. So that's how I take longs, guys.